we're here live on the floor of the New York Stock Exchange and looking at the direction that earnings might be pointing us if it weren't for the fact that we've got this debt overhang and the stalemate in Washington. 277 of the S&P 500 companies have already reported earnings. 214 of them beat estimates. 60 fell short. What's the direction? Rich Peterson here is with me. He's Director of Market Strategy for Standard & Poor. So, Rich, it sounds like earnings were good for Q2. What are we hearing in terms of direction for Q3?
Well, for investors, the anxiety that they see in the Washington streets are being, gets resolved by what's going on in the corporate suites. In that, the corporate earnings are doing very well, better than expected. And the direction, going forward, again, what we're seeing from the Capital IQ estimates are for continued double-digit earnings growth going on, not necessarily in the third quarter or fourth quarter, but going on into early 2012. Now, right now, for second quarter 2011, we're seeing 17.3%, led by materials, energy, IT, but even financials are showing a double-digit earnings growth. But over half the financials that reported look like it's going to be a good quarter overall.
Now, when you look at some of the internals there and break it down by sector, materials, that sector showing the biggest growth, one of the gainers in today's trade as well.
Sure, and again, you're looking at that global theme. People look at the anxiety that the economy is now, seeing sluggish growth in the United States. We have to take into account that nearly 50% of the S&P 500 revenues and earnings are coming from abroad. So the themes of Asia, Latin America, other regions that are expanding faster than the U.S. Those S&P companies are benefiting from that.
So it's American corporations are doing better because the rest of the world is showing growth, not necessarily here at home?
Well, we're still seeing growth here. And if you look at even the IT sector, we're still seeing good gains, be it in Apple and other sectors, and even healthcare. Healthcare, which early in the reporting period, it looked to be like seeing some more disappointment, still going to show a good gain.
Healthcare, some of those misses on earnings estimates really shocked people. That was supposed to be the safe haven. You're still predicting that earnings will follow through in the next quarter? Well,
likewise, look at consumer staples. We recognize there's margin pressure in those sectors. That sector is still seeing over 10% growth for the second quarter. So those companies are managing to keep costs in line to meet analyst expectations.
Exxon shocked people today. You see oil near $100 a barrel. You think that's only going to be a good thing for profitability, but refining margins hurt them there. Is that representative of energy?
Well, while it's disappointing and a surprise that Exxon missed, it's not a non-occurrence. I think it missed in the first quarter of 2009. I think the fact is that as companies are seeking new places to explore and probably met with some regulatory constraints, those pressures may affect their margins. But overall, again, we're seeing 36% growth for energy in the second quarter.
Slowest growth or lowest growth in utilities?
Yeah, I think the difficult there is you have to take into account utilities, in a sense, being a regulated industry. There are probably there are mandates that they can only pass on so much cost to their customers, and in part, they're also being squeezed by the higher energy prices.
Mm-hmm. We hear so much about the $2 trillion in cash on balance sheets. So if corporate America is doing much better, we see resolution. Are you expecting some of those coffers to be spent in the coming quarter?
Well, that's a good question because where's that money going to come from? Again, if you look at just the non-financials in the S&P 500, it's about $1.2 trillion, and we've seen among those companies that have reported so far, the cash on the balance sheet is up about 11% from the first quarter. So that cash bounty is still growing. Now, you have to take into mind some portion of those cash is overseas and issues repatriation. So the difficulty there is that companies may not be able to bring that money home, so they may be buying companies overseas, and we saw that perhaps with like Microsoft buying Skype, which was Luxembourg-based company.
You expect that to be more of the trend?
Well, it's going to be a tripod, buying, raising dividends and buying and reducing debt.
Yeah, that seems to be what we're hearing these days. Rich, always good to talk to you.